99% of people lose money every single year without even realizing it. They don't lose money because they don't work hard, but because nobody explained to them how the system actually works. The dollar in your pocket isn't safe, the bank you trust isn't safe either, and the markets that you are trying to trade, it's not moving the way that YouTubers are telling you. So in the next 20 minutes, I'm gonna walk you through 5 things on what money actually is, why your cash disappears every year, what 99% of people get wrong, how markets really move, and what trading actually is. By the end of this video, you're gonna understand more about money than 99% of the people, including the ones who are giving you the financial advice. What I'm about to show you, most people will never see. Let's start with the most important thing, and that is what money actually is. Most people think that money is real and that dollar is something solid that you can keep in your pocket, that you can hold, and that actually keeps value. But the truth is that it is not. In 1971, in the United States, the dollar was cut from the gold standard, and what that actually means is that before 1971, for every $1, you're supposed to have same value of gold in the vault, and after 1971, it was nothing. Just a basic promise that your dollar is worth $1. Today, the dollar isn't backed by gold, silver, or anything tangible. It's just backed by basic trust. So the money isn't real. The money is actually only agreement. Now let me show you the perfect scam that is actually legal, and that is your bank. So you come into the bank, you deposit $1,000 and you think my money is safe there. When I deposited $1,000 in this bank, they're gonna keep my money, and whenever I come, I can take this money out. And that's true at one point. If you come and you ask for your $1,000, $10,000, the bank is gonna give it to you. But if all of people would come and ask for the money at the same time, what would happen? All the bank would fail. And the reason behind this is that they don't keep your money in the bank. So you come in the bank, you think you put $10,000 and they are safe there and you can withdraw them anytime. But the reality is much different. They use your money to make more money. So basically they lend the money out and they make money out of thin air. So they are creating the new money with your money, creating inflation, and your money is working for them. And the best thing you can get in the bank is 0.5 to 1% return a year on your money, while they lend it out for like 3.5, 4% interest rate on the loans. And that's one of the biggest scams out there. And to be more precise, your money is going to a person who wants to buy a house, he gets a mortgage, or the person who wants to buy a car, he needs a car loan, or basic credit card companies that will lend you out credit for everyday spending. So the bank can earn something between 6 and 20% on some credit cards on your money, while your money is actually just losing the value over time. And the difference between bank's return and your trading or investing is that banks are guaranteed. So this 0.5 or 2% that the bank is going to give you is guaranteed because they didn't do anything smart. They didn't make a smart trade. They didn't think about anything. All they did is rented out your own money to somebody and profit from the difference that these new people that are getting your money are paying them. And that isn't smart, and that's just the things that banks do, and that's why it's at least guaranteed, but it's killing your money and your buying power over time. When your $300,000 mortgage gets approved to buy your first house, that money isn't taken from somebody's savings account. It's just actually a number that is entered on a computer, and they just say to you, it's a loan. That money was never saved or sent to anyone. It's just a number on the screen. This is how modern banking system actually works. So banks are creating the loans then create deposits, and the money is created the moment when the loan is signed. 90% of money is actually created this way. Out of all money supply in the USA, that is actually $23 trillion, only $2 trillion is actually in real hard cash. So that means that 90% of the money is just in the loans, numbers that are on computer screens and actually means nothing. And now stack inflation on top of everything, and you are gonna realize that $10,000 that you have today in your bank account, in 10 years, it's gonna buy you what today can buy you actually $7,000. The money on your statement, it won't actually get changed, but what you can buy with it, it actually will. Why your cash disappears? Let me show you something that's gonna actually really upset you. In 1964, the burger just cost around 15 cents, and burger costs today around $7. what is 47 times increase in price. But the burger didn't get 47 times better. The bun is still bun, the meat is still meat. If you actually ask me, it's really weird because in 1964 they need more resources to get the meat, to get the burger, and the supply was much more limited at the time. While in today's world we have all of these machinery, factories, everything is much cheaper to make because robots are doing it. Now the price of a burger is cheaper in production than what it was 60, 70 years ago, but the price is 47 times more. And what is that telling you? That government or anybody else doesn't care about you, because for them it's easier to make the burger now. Why? Because they have three robots that are just printing the buns or printing the meat, while 60 years ago they had to employ 60 different people and pay them salary every month. Now you have the machinery doing this every single day. You just buy machinery one time and it's keep working. So it's more cost efficient, but it's costing you 47 times more of your money. This is called inflation, and every country does it. Every government prints more and more money every single year to stimulate the economic growth, but they are killing the actual value of the dollar, and that's why investing and trading is really important. The bank where you keep your money is giving you 2-3% at best on your money, but inflation 5-6% a year. So do the math yourself. If the bank is paying you 3% a year and inflation is 5%, you are actually losing 2% every single year, and that would be a good year. Because in reality, inflation gets to 7-8% last 3 years, and the banks are paying maybe 2-3% at the best. So you lost around 10% in last 3 years only. After coronavirus and after they put the interest rates down, they did helicopter money, stimulus checks, they fuck up the whole dollar from that point, and now dollar is just on the downfall. So the saving cash is the most expensive thing that you can do. And here is the part that nobody tells you. And those are the people who own gold, real estate, stocks, the people who trade. Their money is actually getting worth more and more because of the inflation. So inflation goes into their favor because assets don't go down in value. So they just go up because the things became more expensive. So your assets are going up and they are working in the favor of the inflation. So if the inflation is higher, that would be much better for the people who are actually owning the real assets. This is the game that most people don't know, and it's so simple, but this is the reason they are losing it. And in my opinion, this is the first step of understanding anything. Before you start trading crypto, stocks, anything, before you start understanding the market, even if you know this, just make sure to understand it exactly the way I'm telling you, so you understand how the money actually works and why the system is on the opposite side of you. And they are not your friend, they are not your teammate, they are your enemies. And that is the thing that needs to sink in your mind, because only when you understand this, you can move to the next step, and that is how to actually make money from the money that you already have. Now let's talk what 99% of people get wrong and why 99% people lose. And there are four main things, and most of people, they can check at least 3 boxes. Number one, most of people keep money in cash, and that is what we just talked about. So move on, sell the cash and buy some assets. Number two, they invest in things that feel safe, like bonds and government shit, but they are actually not safe because they still doesn't surpass the actual inflation. So it looks like a better choice, but it's not good for you and it won't make you any money for sure. Number three, they trade, they look at the charts, and they are just praying to go into one direction or other. They are listening to all of these YouTubers that don't have the real advantage, that doesn't have any experience in this field, or they are not qualified to speak about it. Let's say a person like me, I started my hedge fund in Dubai that is actually licensed 3 years ago. And we successfully made over 35% return in the last 3 years, what you can check. And we made our investors happy. So we have some, no, I wouldn't say institutional experience, but we know what we do and we have the results behind. And the last thing, but not the least, is what I previously said in a way. You are listening to all of these YouTubers that are never showing the real P&Ls, the real trades in real time. And all they do is renting Lamborghinis, showing to you lifestyle, and you are buying it. You know why? Because you feel bad. So they don't sell you trading. They sell you your feelings about you, and you feel so bad about you because they make money and you don't. So that's the reason why you buy their course. And that is the only source of their income. But there is a secret that I need to tell you, and that is that I did all of these 4 mistakes in my life. Every single one. So you are not alone. I know how does it feel because I was there, and that's the reason I can tell you that you need to get better. Now I'm gonna tell you something that it took me years to understand, but once you actually see it, you will never be able to unsee it again. Markets don't move randomly. Markets are connected to each other, and every single time that one market moves, the other follows up, and vice versa. So you can see which market are following up and which one have divergence, which one are connected. And when something moves, other things moves as well, and they are connected and they are predictable. And these are the connections that are most important. Those are US bonds to US dollar, to commodities, to crypto, to futures, and all together, back and forth. And this is just one of the things that big money actually watch, and that is intermarket analysis. So it's just one thing that big players do. So they connect all the markets to predict just a single one. So they connect all the dots and find where is their bigger edge and what other markets are telling them about this one that is giving you edge at the time and that can show you the real direction of the market. And that's only one thing. You have more things like seasonality, open interest, commitment of traders, like many of the pillars that big players do and what they watch while they trade. And this is just one single of them. And if you trade just based on this, you still can do nothing. You can get the bias, but you need all of these things together to actually know what you do. But you now know at least the first thing that's going to help you understand how the market actually works. So let me just be quick and let me show one case study how we can understand this a bit better. Let's took the time where Iran started war with USA or vice versa, when it was the war, and there is still war. And when the war started, around 1 week before the war actually started, Bitcoin dropped to 60 to 70K, and it was absolutely fear, and people were telling that Bitcoin is gone. People were saying that we are entering the biggest bear market ever and that crypto is done forever. Why they don't actually remember that just 5 years ago, Bitcoin was around $10,000 and that this was actually just a healthy pullback. If you look at closely of the price of Bitcoin, you can see that the price was actually more than 100K for the last 2 years. And last time the price hit $60,000, it was, I think, around 3 years ago. So this was one in a 3 years opportunity. And 5 years ago, you could buy it at only $10,000. So the math is still there. And people just look like the short picture and what they tell them in the news, because news are fear driven. Because when the news is already out, they want you to trade based on this news. And they want you to lose money. And this is how you would lose money. 2 weeks before Iran war, Bitcoin hit 60K. Then the war came. Strait of Hormuz got closed and the panic arrived. Everybody was panicking. Every time when commodities is going through the roof, like oil, the gold will go up as well, and you'll see a big downfall in the dollar. And that's why you know that things like Bitcoin also should go up from there, because you have massive fear. And if you listen to the news, they tell you that economy is collapsing and that you should sell your Bitcoin. And 2 weeks in the war, Bitcoin ranges between 60 and 65K. And that is when I realized that we see US oil up, we see gold up, and we see dollar down. And at that point, intermarket analysis told me that this is bottom for Bitcoin. And not just bottom, but the bottom was 2 weeks ago, when the war officially didn't started yet. It was nothing about the war, not even a rumor. Bitcoin were dropping 2 weeks before that. And when the war started, and the war things start to appear on the news, Bitcoin didn't drop more, and we see these things in prices with oil, gold, and we saw in commitment of traders, a lot of funds buying and accumulating Bitcoin at the same time in the backend, so we kind of knew what we have to do. And for me, this was the clear sign that Bitcoin bottom is in, and that is when I actually bought. And many people would sell at the time because the news started spreading. And what actually happened? We saw a little bit bounce in S&P 500. Bitcoin was consolidating because it was going down before, while SPX didn't went down before. Now SPX is already at the all-time high, and Bitcoin is around $80,000 already. This was the case study where we show you how we were able to make around 20% in 2 months, while most people were feared and told to sell. And the reason we saw it, as I already repeated to you, Bitcoin did the lowest point in price in last 3 years, so it was one in a 3 years opportunity. That was done 2 weeks before war actually happens. And when the war actually happens, we see inter-market analysis positive for the Bitcoin, and we don't see Bitcoin dipping more, but actually started consolidating. So that's when we saw that bottom is actually in. Also, you was able to see that we hedged our spot position, and I show you this live trade in my previous vlog where we were driving supercars to the mountains. You could clearly see that I opened a hedge position that is now around $20,000 in profit, just to protect my spot bags that I bought at 62K. And the reason I sold exactly at that time, and I was right again, because I sold at 82,000 and the top was 82,500. So I catch almost the top and it went down to 71,000. So that was another 5%. So we made more than 30% in total in less than 6 months. And my goal is around 35% a year. Sometimes you're gonna be wrong, and that's normal, you're gonna lose, but last 2 trades that we had that were massive actually went in our favor. And the reason I opened hedge position is again intermarket analysis with other things that I follow. At the time I opened the short position, I was able to see that there is bottom for US 10-year yield and also for the dollar. And after that bottom, my prediction was that US 10-year yield is just gonna go up because it just broke the new high. Same way dollar did. And every time when you see a bigger move of these two going up, the Bitcoin will probably fall. And the reason those two go up is because you was able to see in commitment of traders that big funds like non-commercials, pension funds, hedge funds, they were selling Bitcoin futures position. And the reason they have to sell is because the quartal is coming. Now it will be around 1st of June, and pension funds, most of hedge funds, they pay people on quarterly basis. So every quarter people get paid. So before the 1st of June, they had to close the position in order to make the final report, and they have to sell massive bags of Bitcoin. And in last 2 years, the biggest holders and the most important player to look inside the crypto market are actually the big investment funds like BlackRock, like pension funds. They are all buying Bitcoins and they have billions and billions of dollars, while retail traders altogether, we are not 1% of them at the moment, and they are just getting bigger and bigger. Only bigger people in the market are whales, the people who accumulated Bitcoin at a very early time. But while the time goes on, funds will be the biggest players in the game because they couldn't stop it, they need to control it. And this was not like this a few years ago, because they recently, like 1.5 years ago, they did the new method how they can invest in Bitcoin, because it was too risky for them to open exchange or just buy Bitcoin directly. So they created Bitcoin ETF. It's an investment security where those funds can legally enter with hard cash on interactive brokers or some prime broker that has big reputation inside these circles, like JP Morgan itself, and etc. etc. They all trade to Bitcoin ETFs. And because they trade through Bitcoin ETFs, we can track this in commitment of traders, because CFTC, the regulation of the USA, they had every move they do, they had to publicly announce, and most people don't know this. They announce this move every Thursday, so we know exactly position they are entering. And this is one of our footprints that we use in order to track these positions. This is the main difference between a gambler and a trader, because we start with information like this, and then we go down to open trading view that I show you in the vlogs, and then we just find the perfect entry based on technical analysis, based on mathematics, standard deviation, and if we are entering on a daily basis, we want to price in a day to be -1 standard deviation from the last 5 days in average. So we want big move up or big move down when we know the bias, and that's when we kind of get the perfect entries. But that's 20% of our trading. I mean, it's still important to get the best price of the day or the week, but this is the last thing that we focus on. After we understood the whole picture like this, then I used my standard deviation indicator, and I entered on short at 82,000, and you could see all of this here. So yeah, it was really simple, and this is what will separate trader from a gambler. Every single thing that I showed you in this video is actually less than 5% of the things that I do every single day. If you made it this far, you are really serious about understanding the trading the right way. If you want to go a bit deeper, if you have 5-figure portfolio and you want to grow it to 6 figures, and also if you want to learn how hedge funds actually moves and how they really trade, you can click the link into description and you can pass the form. If you are qualified, somebody from my team will personally reach out to you and we can move from there. But only if you are really serious, because this is not for people who are looking for overnight success, but this is for people who wants to understand how the real game works. Guys, thank you for watching and click that subscribe button if you don't want to miss the next video. And in the next video, I'm gonna speak about where the Bitcoin will go next. You can see a lot of these theories online where people still stick to the old patterns like 4-year cycle, and I think the markets fundamentally changed and they are not like they used to be. So if you want to know with what theory I came up with and what is my approach as irreversible cycle about Bitcoin, please hit that subscribe, like, and thank you for watching.